Howdy, Jacob here. Today we're looking at ticker symbol PRDO, company 99 of our high ROIC screener in the diversified consumer services industry. First thing I see and crazy is their market cap is double their enterprise value. So very safe balance sheet. It looks like the company provides post-secondary education through online, campus-based, and blended learning programs in the U.S. Incorporated in 1994. Okay, looks like they also offer academic programs such as business management, nursing, healthcare management. Revenue has been relatively flat. We see that before COVID, it actually declined pretty heavily for the 5 years pre-COVID from 914 million down to 581 million, but it is going back up to 710 million. And it looks like their return on invested capital has very consistently been in the mid-teens. That could be due to share buybacks, though. Just remember when you repurchase shares, it does inflate that ROIC number because it's based on the balance sheet. So the balance sheet shows about 600 million in liquid assets from cash and equivalents and short-term investments, with 166 million in total liabilities. So that's absolutely impressive. Very impressive feat. Their balance sheet is very conservative, and um, if you were to buy this business for nothing and just sell off everything, you would easily be able to produce 500 mil plus or so. So use of free cash flow is they've been reinvesting quite a bit, making some acquisitions, buying back a little bit of shares, and then paying a dividend. So on a 5 year average basis, we're probably looking at, let's be conservative, let's say $100 million. Of that 100 million, maybe 15% is to share repurchases, 15% to dividend, and then let's say 20% acquisition, the rest to reinvestment. So they're reinvesting quite a bit. That's great when you have a mid-teens return on invested capital. That means that at least historically they've been giving the investors a great return on the money that's reinvested back into the business. So that's a very positive sign to see that their use of free cash flow has been going pretty heavily towards that reinvestment. And I think we're ready to make some assumptions here. Okay, so revenue change. It's not going to be a sexy growth business, I presume, at least from what I'm seeing here. I might be fairly conservative with my 3%. Let's maybe go market average on the PE, price free cash flow, saying that at the end of 7 years, uh, their ability to reinvest back into themselves is greater than the market, but the growth might not be as substantial. For margins, let's go closer to the averages here, 15, 17. Let's maybe do 16 and 18 with share repurchases, 1.1 billion. That'd be 11 million, 12 million. They're definitely able to buy back 1% of shares, but if this company gets cheap enough, I do want them to be buying back way more shares. So let's be conservative. Let's say 1%. And then for dividends, they haven't had a long history of them, so I'll probably just keep it where it's at, even though they can absolutely afford it. Um, yeah, okay. So fall 15% to get a 15% return on this business. Interesting. Just keep in mind here, you don't have to find these sexy 20+% growth revenues with 50% return on invested capital to be a great investment. Every investment is present value for your future cash flow. And what I see here is a very solid earnings and free cash flow producing business that has a use of cash, at least recently, of pretty well reinvesting back in themselves, getting that high rate of return by producing these upper rates of margins. And then hopefully when shares get cheap enough, they are buying back shares like crazy. That is what I want. If they can get a 15+% on their return by buying back shares, they should be buying back as many shares as possible based on the fact that they can get that 15% return over a decent period of time. Whereas there's other reinvestments and giving a dividend may not be able to produce at those types of rates. So honestly, great investment here. Or definitely a possible investment. I definitely look at this company if I were you. Do some more research. I will be doing research not too long since it's really not too far away from the price point that I'm looking for, given these assumptions. So hopefully you enjoyed the video. Have a great rest of your day. Thank you.